Good day, everybody. It's Steve at Credit Suite. Welcome to today's live stream. We've got a lot to talk about today. We're going to dive in today and talk about some straight talk about bad credit business loans. So what we're going to be talking about is about loans that you can get if you don't have optimum personal credit. Okay, some straight talk about bad credit business loans. Like I said, my name is Steve Weibel. I'm a sales rep here at Credit Suite. I've worked here for quite a bit. I'm sure most of you have seen or heard from me at least once or twice. So let's dive in, okay? Last time, we actually covered how you can leverage your business credit for higher limits and easier approvals. Right? We also talked about how good payment history is going to help get you higher scores, why higher business credit scores will help eliminate a need for prepaying for your orders, for handing over a deposit, and or providing a personal guarantee. It'll also improve your chances of getting a credit limit increase when you ask for one. So simple, right? If you remember from the last time we talked, that if you build your business credit profile the right way, you can leverage that to get significantly higher limits. So if you're a contractor who got business credit from Home Depot, as you use that credit and it's reporting positive, you can go back and negotiate higher and higher limits. And I'm telling you, you can take those numbers to the stratosphere. So that's what we talked about last time. And obviously, it's going to give other credit providers the confidence to approve your credit application. Hence, the more number of trade lines, the higher the credit limits, the easier and easier it gets for you to be given those credit lines your business so desperately deserves and needs. So today, we're going to talk about bad personal credit, how it can cause problems for funding a business. So when we talk about funding, we're talking about cash. We're talking about you actually getting a loan that will go into your bank account that you can use to spend on a multitude of things. And personal credit can play a really big role in whether or not you're able to get that business loan. You know you need good business credit, but until you build it, personal credit is going to be a bigger issue. Here's some good news, or bad news, excuse me. Bad personal credit can make it very difficult to get business funding from traditional sources. How you can get funding for your business with bad credit before you have business credit. So that's what we're going to talk about. How can you get this funding for your business with bad credit before you have business credit? So here are a couple of unexpected funding options. If you're trying to fund your business but have bad credit, there are one or two things you really need to do. You need to find a way to get the funding you need right now, obviously. I call putting out today's fires. As opposed to thinking about the future, and building your business credit is certainly important when we talk about your future. And you need to work on that business credit profile that'll separate from your personal credit. All right. So if you're trying to find funding, there are two things you need to do. Find a way to get the funding you need now, and then work on building a business credit profile that separates from your personal credit. Okay. So now today we're talking about getting funding now and assuming you have bad credit. Okay, and a lot of people don't feel bad about it, especially when starting a business. Matter of fact, most business owners I talk to, they end up wrecking their personal credit before they figure out the business credit situation, and then they can build it back up again. So here's the problem. Established businesses have options that newer businesses simply just don't have. That's because they typically have cash flow, right? They've been around for a while, things are going, they're humming along. It's a little bit easier for them to get a loan or to get funding. Or they may even have other business assets they can use as collateral. They can use anything like equipment or a commercial building. They can use open invoices and receivables. So there are multiple options for businesses that are established and have been around. They've got a little bit of a history that lenders can look for. One of those ways for them to get financing is through cash flow financing. It is as simple as it sounds. To get cash flow financing, your business cash flow must be positive and well managed. This is where I run into some misconceptions. I talk to business owners and say, yes, I have X amount in cash flow, and on the surface, it looks like they qualify. And typically what we look for, or our lenders look for, is $10,000 a month or more in cash flow in order to get cash flow financing. But the problem is, if your bills are $11,000 a month or $9,900 a month, you don't really have positive cash flow, right? You have cash flow, it's just not positive, or it's not positive enough. So you need to have good cash flow, and it must be positive, and it must be well managed. You can't have low cash flow at all. So in other words, you can't say, hey, I'm only doing $5,000 a month, but I'm making $4,000. That's not going to qualify. All right. And you certainly can't have high operating cash flow and high total debt, which we just touched on. So again, typically a minimum of $10,000 a month. They want to see it well managed, and each lender is going to have a little different idea of what well managed is, but it should be profitable, obviously. I don't care how profitable you are. If you're below 10 grand, it's still going to be very difficult to get cash flow financing. Maybe other options, but cash flow financing, they're looking for that minimum, and they're looking to see that it's managed very well. Lenders want to see that you both have positive cash flow and that you manage it wisely and responsibly. Okay. So what is cash flow financing? You're basically borrowing from part of your future cash flow, right? So you're borrowing money against the fact or the bet that you expect to generate future cash flow that is similar to your past, right? So past proves future, right? A payment schedule is based on the company's projected future cash flows and the analysis of historical cash flows. So they're going to analyze what you've done between the last 3 and 12 months, depending on the lender. And then based on what they see there, they're going to project what you're going to collect in cash flow in the future, and they'll make you a loan offer based on those projections. So, and by the way, I'm going to touch on that $10,000 a month. That doesn't mean you have to do $10,000 every single month. What they're looking for is roughly $120,000 a year. So if that comes in spurts, and it does, there's no such thing as a business that does this, that's level, or goes straight up. You're going to have the peaks and the valleys. All right, so don't panic if you have a couple of months where it's 8,000. As long as combined, you equal $10,000 a month or more. All right. You may need to meet a certain minimum credit score for requirements, but it's not going to be as bad as an unsecured line of credit because they're leaning heavily their decision based on your ability to generate that cash flow and therefore your ability to pay that loan back. Makes sense, right? If you meet the cash flow requirements, it may not be as big of an issue as with other types of loans, like we said. You'll also need to prove historical cash flow. Again, they're looking at the past to predict the future. And they're going to verify your accounts receivables and accounts payables. So they're going to make sure that you're going to, maybe if you show them books saying, hey, look, I'm super profitable, but you're not showing them your payables and maybe you owe $1 million. They're going to want to see all that. They're going to verify what's owed to you and they're going to verify what you owe. So that sums up cash flow financing. It's a really good option. Matter of fact, I love it if you have an opportunity, let's say, and I use this example a lot, as a t-shirt maker, you get an order for, let's say, 500,000 t-shirts, and you're going to double your money on it. You're going to literally double your money, your cost and whatnot. You just don't have enough to buy the t-shirts because you don't have a good business credit score yet. Sometimes cash flow financing is a great way to get that production done. Okay, so that's cash flow financing. Let's touch on merchant cash advances, or MCAs as they're known. A lot of you may know what that is, but you may not know exactly how to get them. So let's explain exactly what they are and how you can get approved. If you have steady flow of credit card sales, and they must be credit card sales, this can be an option. A percentage of your business's daily credit card sales repays the loans. And I will tell you, typically it is a daily repay. So they're tapping into your account daily. Not all the times. You certainly want to talk to a lender to find out what their requirements are. But I see this a lot. Rates on a merchant cash advance, by the way, are also much higher than other financing options, but that's because the personal credit score minimums are really low. I mean, really low. You almost have to try not to qualify for an MCA if you have high cash flow with credit card sales. Okay, so that's an MCA. If you're interested in finding out more, go to creditsuite.com/live, download your free business credit building guide, and certainly you can reach out to our team at any time. That's MCAs. Invoice factoring. This is one you may not have heard of before. It's been around a while. This is an advance on open invoices. So if you are a manufacturer, all right, and I'll touch base on where I came from. I was in the printing industry, and let's say I produced an invoice and I sold Credit Suite $1 million worth of brochures. I could get a loan or an advance based on those open invoices. It's not really a loan. The lenders actually buy the outstanding invoice at a discount. I have to tell you, it's a very dangerous thing to do unless your margins are really, really high. In my world, the manufacturing world, the margins really weren't that high. So what they charged, the fee that they charged off that invoice typically ate up all the profit. So it's not something you want to do. Matter of fact, in our world, if you did this, that was generally the death knell. That was the end of your business. Maybe it would take another year or two, but it was certainly not going to be a happy time for you in the future because you really weren't making any margins. They charge a fee to provide you with part of the cash up front. These loans generally require collateral. They're also going to depend on the lender evaluating, by the way, your customers' who owe your company money and their ability to pay. And this is where it can get a little janky. Man, that's a terrible word, isn't it? They're going to evaluate your customer, and sometimes they may mean reaching out to your customer. Now, that can become problematic if you don't want your customer to know that you're having some financial issues and you need to borrow money against future sales, which is basically what you're doing, future collectibles. They're letting your customer know that you may not be as financially stable as they thought you were. So this is really to me, is a last minute. I'm not saying it shouldn't be used. There are times when it's perfect. And that t-shirt example was a great one, but you've got to have a customer who trusts you. You've got to, and in my opinion, you want to let your customer know in advance that this is happening. Okay. That's invoice factoring. Again, you're borrowing money against an open invoice, a receivable, basically, kind of. Speaking of receivables, there is accounts receivables. All right. If your business has unpaid invoices, okay, then this can be a good choice. Lenders will not check any personal credit on this whatsoever. Your invoices and payment history of your customers is what they look at. So AR financing differences from invoice factoring that the rates actually, the factors actually buy your invoices at a discounted rate. While AR financing require you to pledge or assign the invoices as collateral, right? So AR financing, they're buying the receivable. Accounts receivable financing, you're actually assigning the invoice. There's a difference, all right, as collateral for a loan. Other options. If you have collateral or a guarantor, you can actually get a business line of credit, all right? So if your business has collateral or a guarantor, you can get a business line of credit, even if you have bad personal credit. Alternative lenders sometimes have lower credit score minimums as well. So maybe there are secondary or third tier lenders out there who will give you a business loan. I will tell you the odds are the interest rate is going to be significantly higher than a prime, obviously, but they will give some lenders will give loans with lower credit minimum scores. So you obviously want to check on that. And then there's the product that we have, which is the credit line hybrid, if you have a credit partner. And when we talk about a credit partner, we're talking about someone who will sign on the dotted line as a guarantor, but it still goes in the business name. And we'll dive into that a little bit further. So let's talk about business lines of credit. They work like a credit card. Right? A business line of credit offers access to a revolving balance of credit. Limits are often lower than a traditional loan, but they offer way more flexibility and convenience. So one of them is, we just touched on it, our credit line hybrid. All right. The credit suite program does require good personal credit, but it doesn't have to be the owner's personal credit. Right? I'll say that again. It doesn't have to be the owner's personal credit. You can take on a credit partner with a score of 680 or above. A credit line hybrid is a form of unsecured funding. A credit line hybrid has even better interest rates than a secured loan. Typically, they're going to start at 0%. I think we're going to touch on that here in a second. You can get some of the highest loan amounts in credit lines for business. Again, 0% business credit cards with stated income. Let me repeat that. 0% interest business credit cards with stated income. And these report to the Business Credit Report Associates. So the credit report agency, excuse me. So you can get these credit cards with a guarantor that go in the business name, and they can help you build your business credit profile. So you actually get to kill two birds with one stone. Sorry for people who love birds. You're going to get to build your business credit and get access to the credit lines that you need right now, right? To me, this is one of my favorite products. I've done it. It's fantastic. You get high limit credit that you can use today. Typically within 30 days, you're going to get these. They're going to report on your business credit report. They should not report on your personal credit. However, there are some cards that will. So you want to be careful about that, and talk to the lender directly if you decide that's something you want. You're building business credit at exactly the same time, and this will get you access to even more cash with no personal guarantees. So it's a double header. You get access to the credit you need now. It launches your business credit profile with high limits, which is outstanding. It's like raising the floor double the height, and that allows you to get quicker access to future credit lines with no personal guarantee. These are the terms for qualifying. So other than a credit score of 680 plus or a guarantor that meets this requirement, there's no financials whatsoever. All right. You often get a loan of 5 times the amount of your current highest revolving credit limit amount. Here's what I mean by that. If you have a credit card for $20,000 that you've had over a couple of years, reach out to our team to verify what the exact details are. Matter of fact, go to creditsuite.com/get funding. You can do that right now and reach out and say, I'm interested in the credit line hybrid. But typically, you're going to get 5 times the amount of your highest revolving credit card. So 20,000 would equal roughly 100,000. Matter of fact, I've seen as high as 150,000. $150,000. I can tell you my number wasn't that high. I'm not going to dive into how my personal business, but it was pretty high, and it's great. It's fantastic. Matter of fact, little inside secret, ladies and gentlemen, if you manage these cars, and when I say manage them, treat them like you have 30 days to pay them off, especially the first year, they'll double your limits. They'll significantly raise your limits. I say double because that's what happened to us, but who cares if it's 50% more, right? So if you manage it properly, these limits will continue to get raised. Because remember, they're in the business of making interest off you. They want to see you carrying that debt, at least some debt. So they're going to entice you with higher and higher limits if you manage it properly. Little inside secret. All right. Speaking of inside secret, there are many ways friends and family can help you get funding for your business. They can sign on, obviously, as a credit partner. We just talked about that, help you get the credit line hybrid if you don't meet the qualifications. That's easy one. They can help you get a loan from somebody called Kiva. All right. Kiva, we're going to dive into that in a second. They can use their existing 401k, stocks or bonds. All right. So there are multiple ways, friends and family. So when people say, what can I do to help you? If they know, love, and trust you, they believe in your dream, maybe talk to them about this option, right? Talk to them about this option. If all you need is that boost to get that business to the next level or even get it off the ground, but you know it's a great idea, talk to your family. You'd be surprised how many will step to the plate. So speaking of, let's talk about Kiva. Kiva is one alternative lender that requires the support of family or friends. They require the support of family or friends, all right? The funds may not be enough to fully fund the startup, but it's a really good start. They can be combined with other funds, like the credit line hybrid. And it's a great way, to be honest, for family to help without a huge cash outlay. All right, to get a loan from Kiva, you must have at least 5 friends or family members willing to contribute. So you have to have 5 at least. Obviously, the more the better. Kiva's mission is to provide business capital to underserved persons and communities. Okay, loans are crowdfunded in increments of $25. These loans are offered for 0% interest for up to $10,000. So again, $10,000 isn't going to send you to the moon, but it can get you off the ground. It can get you moving. It can get that first order in. Borrowers can then market their goods and services to over 1.6 million lenders around the globe, right? However, borrowers must be willing to contribute $25 towards another borrower's loan, which is awesome if you think about it, right? So crowd is going to fund your business. The only obligation you have is to get some family members to do the same, to throw in at least $25, right? And you must be willing to throw in $25. I love this idea. This is the community helping to fund the community. Yes, it's not going to be $1 million. It's typically up to $10,000, but wow, what a game changer that could be for some business. I know when I first started my business, I could have used 10 grand. Oh, I think 2 grand is what I started my business with. So Kiva, take a look. If you're not sure how to find it, reach out to us, creditsuite.com/get funding. All right, so let's dive into something else, 401k financing. This is a product that gets confused a lot for people, all right? So I'm going to try and give you the best details I can. I'm no expert on 401k financing. I have a 401k. I don't want to touch it, but I know a lot of people have started hugely successful businesses borrowing from a 401k. So if you have your own 401k, of course, you don't need a family member or friends to help with this, right? But if you do not, and you have a family member or friend that does, this is a great way for them to help you while still earning interest on their funds and no cash outlay. So again, they're not personally giving you the money, right? It's coming out of the 401k. Oh, there you go. Our 401k financing offers a powerful and flexible way for new or existing businesses and franchises to leverage assets that are currently in a 401k plan or an IRA. All right, this is where it gets a little tweaky. This is why I want to make sure I slow down on this a little bit, because I may be learning a little something here. All right. In as little as 3 weeks, you can invest a portion of your retirement funds into your business. 401k financing is easy to qualify for. You won't need financials. You don't need good personal credit to get an approval. All right. To qualify, it's a few things. What they're going to require is a copy of your 2 most recent 401k statements. This is a 401k rollover for working capital program. Okay, so again, 401k rollover for working capital program. It's known as a rollover for business startups, a ROBS. You might want to look that up, ROBS. Okay, I've actually heard this at live events. I've heard people talking about it. It's really interesting. This type of financing isn't a loan against your 401k, so there's no real interest to pay. You're not borrowing. It's not like fronting money from your 401k and then paying that money back with interest. It does not use the 401k stocks as collateral. Instead, it's simply a movement or change of the custodian of the 401k. It's real simple to qualify. Your 401k has to have a value of more than $35,000. You could be approved even with bad credit. Okay. However, you can receive whichever percent of your 401k is rollable as financing. Cannot be from a business where you are currently employed. So it needs to be from an older employment. Okay. You cannot be contributing to it currently. Your 401k must have $35,000 in it. Okay, so that's 401k. Sounds a little complicated, right? I know it does. If you're unsure, reach out to creditsuite.com/get funding. Once again, creditsuite.com/get funding, or go to creditsuite.com/live, right? creditsuite.com/live. My favorite, using business credit to fund your business. Now, you can use one of these options to get funding you need right now, the ones we just talked about, but you need to build a business credit profile for your business at the same time, not as the same time, at the same time, right? This is eventually going to allow you to get funding for your business without a personal credit check. And you know, it's even more than that. A company with good business credit has far more options, way more opportunities than a company that's just using their personal credit to fund it on a daily basis. Even if you have terrible personal credit, terrible, you can build millions of dollars in business credit if your company needs that much business credit. I'll talk about the printing industry again. Having business credit was super important. We were manufacturing a finished product. I don't have a flyer I'd handed up to you or showed up to you. I had to buy paper. I had to buy ink. I had to buy plates. I had to buy boxes. I had to buy things to produce that end product. If my suppliers didn't give me business credit, right? I didn't have a good business credit profile. If I didn't have a good business credit profile and they didn't give me that credit, I would have had to pay cash for those supplies. And if I paid cash for those supplies, in our world, you never ask for cash from your end customer because they were usually big corporations. Big corporations don't pay cash. They expect business credit because they have strong business credit profiles, right? So I had to offer credit to my clients. So in turn, I needed to get credit from my suppliers, right? They never check my personal credit. They just want to know, is my company's business credit strong? This is of utmost importance. If you own any business, you need to build your business credit profile. You need to. Okay. If you use these types of funding to get, by the way, if you use these types of funding to get the ball rolling, you can buy yourself some time to work on building a strong business credit, right? So the things that we talked about, you can, if you use any of those, that's going to buy yourself some time. But don't wait. Don't wait. Reach out to creditsuite.com/get funding. You really need to start building your business credit profile now. If you're not sure how to do that, no problem. Set up a free 30-minute consultation. We'll talk to you about it. We'll talk about fundability. We'll talk to you about the plan to get you to that level. Anybody out here want to buy a new car in the next 2 years? Don't sign for it personally. Let your business sign for it. You can easily do that. Anybody out here want to get a high-limit Visa, MasterCard, American Express? Don't sign for it personally. Let your business do it. It's not overnight. It takes a little time. But you don't plan on closing your business in the next 12 months, do you? Of course not, right? You want to be here for the next decade, maybe multiple decades, maybe leave it to your children, right? Guess what? A business credit profile goes with the business. If you sell it, if you leave it to somebody, it sticks with it. With strong business credit, you can apply for funding in the business name, right? Even if the lender does personal credit check, in other words, they do a personal credit check, a good business credit score may convince them to approve funding anyway. Matter of fact, I can tell you for a fact, I know someone who got turned down for an SBA loan with strong personal credit, good financials. Everything looked great about that business. They got turned down for a real small one, actually, what's called an SBA Express. They came through our program, built their business credit profile, went back, applied for the same exact loan, and got an automated $100,000 approval, $50,000 higher than what they originally applied for. The only difference was their business credit profile. So don't poo-poo it. It's a big deal. So to recap, bad personal credit can make it hard to get business funding, but established businesses can use cash flow, credit card sales, open invoices, and most any business owner can get help from friends or family in the form of 401k financing, and the credit line hybrid is a great option too, right? Don't forget, credit line hybrid. If you reach out to us, mention the credit line hybrid. Whatever you use to fund your business now, be sure to work on building your business credit to expand your options, okay? Our finance specialists are eager to help you and your business succeed. I promise you, it's worth your time. Reach out to us, creditsuite.com/live, creditsuite.com/get funding. Next time, we're going to cover how to set your business up the right way to build business credit. You'll discover a number of surprising issues that can affect your ability to build business credit, a number of them, including your business name, the address, licenses, organization type, and much more, to be honest with you. All right, so don't forget, next time we're going to cover how to set your business up the right way. Again, get access to every legitimate funding program all in one place. You pay us no fees ever if you're just looking for a loan. Use our loan volume to get lower rates and fees. I promise you, you're going to save money. And then we have our business blueprint to graduate to the SBA loans. Honestly, you never have to look for funding again. All right, contact us at 877-600-2487. My name's Steve Weibel. I love being here with you again today. Don't forget, reach out to us at creditsuite.com/get funding or call 877-600-2487. Love talking to you. See you next time.